so much for joining us for Retire Your Way with Ben Heizer, powered by Thrive. I'm your host, Spike Spangle, and on our weekly programs, we talk about retirement planning strategies for you. Ben, father of 4, founder of Thrive. How are you doing? Do you ever get to sleep, buddy?
Some days, not always. So when I come out and we get to do this kind of stuff, you know, helps me sleep.
Yeah, we get to have some fun. Yeah. And the thing is that retirement planning today is completely different than it used to be. You know, it's no longer getting that sheet cake on a Thursday afternoon, you know, your gold watch, you know, thank you for your 30 years of service. A lot of the planning now is on us, and we're seeing people work a lot longer, maybe push off their retirements. And one of the biggest reasons why is taxes and the tax implications. So if you don't mind, folks, we're going to be talking about tax implications in your retirement today. You even said it's one of the biggest tricks ever played on the American. What exactly do you mean by that?
Well, you know, taxes, you know, the biggest trick ever played is, you know, we get the 1978 Revenue Act. Right? What happened here is corporations, like what Spike was just referring to, is we had the gold watch and the pension, and it allowed us to have our paycheck, and then Social Security added our paycheck. It was the three-legged stool, right? Our retirement savings were there as a backup, but we had our paycheck and paycheck already covered, and so we were able to retire with confidence, and then things weren't taxed. And then this 1978 Revenue Act comes along with the custodians that want to hold your money and make money off of it, right? The IRS, and you have court custodians going, I don't want the responsibility of having to save for your retirement and then give you a paycheck every week or every month in retirement. We're going to push it off on you. Well, all these companies got together. This is great. So the IRS says we're going to create what's called a 401k. So now the corporations don't have to save anymore. You have to save for your own retirement, but we get to play with the game. This is the concept of saying, let me ask you guys a question. If you were playing a game with your family, but really they didn't tell you what the rules are, and they said, we'll tell you the rules at the end. Would you play that game? Probably not. So, but that's what happened here. They said, here's a 401k, and here's how exciting it is, and you get to save, and you get to pick your different options.
Right, sounds good, right?
What makes us qualified to pick our own options? We're not retirement planners, right? You didn't go out and get a license. And so now it's pushed off onto your shoulders. It creates a burden, and so it creates uncertainty. So we went from having this three-legged stool of certainty to now this stool is broken. Right? So our Social Security, we're fearing, is it going to be there for us in the future? It's also taxed now when it wasn't before. Then we have pensions that have almost been eliminated from the face of the planet. Now, if you're lucky enough to have one, great. But if you're a state employee, those are covered pensions, and they impact your Social Security. It's not like you get to add the two together. And then on top of that, the 401k. This is one of the greatest tricks ever played, folks. Here's what they did. You get to save today. We're going to get to save in pre-taxed. You get to get a tax deduction right now. But then what happens is your money grows over 20 or 30 years of saving. And then what? The IRS gets to tax you. And this is why, you know, we refer to the IRS, right, not as the Internal Revenue Service, but I rob seniors, okay? So the reality is that, so, folks, we got to dig into this because this is extremely critical. This is not your fault. You just did what you were supposed to do. The burden was shifted to you. And then this creates an additional hazard to our income because they can change the game whenever they want to. In fact, if you don't know this, we have this year and 3 more years. So the end of 2025 is when our current federal tax bracket expires. And I want you to think to yourself, do you think taxes are high or taxes are low? And we look at this as like a lump sum illusion when we start to empower people with information. What's a lump sum illusion? I got $1 million in my 401k. Great job saving. But is it worth $1 million to you? Well, it depends on the income you make in retirement. And it depends on the tax code that you fall in. And whatever your tax bracket is, between 10 and 37% is a direct reduction that we have to give our silent business partner.
So at the very least, if you have $1 million in a retirement account, 10B, you really only have $900,000 at 10%. And most people have much less than that. And you've alluded to a few other things, that Social Security gets taxed. We have to take out these RMDs. Possibly our pension is taxed.
Yep.
Tax seems to be one of those things that we just don't pay a lot of attention to until we get to retirement, and then it seems like that's all we talk about.
Well, tax risk is the only risk that we don't have the ability to diversify away, okay? We can diversify away market risk or eliminate it in some situations. We can diversify away inflation risk. Tax risk is the only risk that we either pay it now or we pay it later, and there's certain tax brackets today. So let's talk about that. Is it a good time to do conversions like a Roth IRA or a 7702 life conversion where your money becomes tax-free? Potentially.
Okay, two great concepts. We've got to give those time. We are going to talk about tax solutions. Let's definitely come back with the Roth right after break. And then also during that, I would like to talk about what exactly is a 7702 that's based on life insurance, right? And kind of taking out your own loan. So there are solutions out there for our viewers. One of the things we want to do, we talk about this every single week, folks, for our valued weekly watchers. We're so glad that you watch us. We are continuing to do our retirement readiness review. And this week, we're also throwing in the tax map. So, so what exactly you're going to review with taxes?
Well, in a tax map, what we can do is take a look at the qualified assets that you have, your 401ks, your 403bs, your traditional IRAs, and we can look at the tax impact in 3 levels. That's going to be the taxes from your income, then reinvesting that money and paying the capital gains taxes, and then the taxes when you pass away to your family, and addressing those things and looking at that number versus looking at planning where we can mitigate away some of that while taxes are at 90-year lows.
Right. So we're going to take a very short break right now. I do want to talk once again about the ins and outs. I continue to get phone calls and emails. What exactly is the Roth conversion? Who is it for? How do we do it? So we're going to talk a bit about that. And then, new discovery here, this 7702, if you have life insurance, we might be able to find another way for tax-free income. Call 855-855-7655 for your own retirement readiness review and tax map with Ben Heizer. Or you can use the QR code on the bottom of the screen. You open up your cell phone right now and go to the camera, point it at the screen right there and click on there. It's going to take you to Ben's risk report. And down at the very bottom, you can schedule your own appointment if you want to. So use the QR code, use the phone number, but call for your own retirement readiness review and tax map. More with Ben Heizer, Roth conversion, when we get back right after this.
Call 855-855-7655 to receive your complimentary tax map with your retirement readiness review. Learn multiple strategies that can protect you from higher taxes now and in the future. Taxes are a threat to your financial stability in retirement. Protect yourself from the potential threat of rising taxes. As a retirement planning financial advisory firm, Ben and his team will help you navigate the financial waters to pursue your retirement goals. Call 855-855-7655. Ben and his team provide inclusive retirement services such as investment directives for your portfolio, income-producing strategies, and wealth preservation plans for your family and legacy. Call Ben and his team now at 855-855-7655 for your complimentary tax map with your retirement readiness review. Discover tax strategies to keep more of what you have saved in retirement, or use the QR code below to schedule today.
Welcome back. You're with Ben Heizer of Retire Your Way. I'm your host, 𝗥𝗥𝗏 𝗥𝗏. Tax solutions today in retirement. But you even said before we can start talking about tax solutions, we've got to talk about the income. I don't know, so which first, the chicken or the egg, income or taxes?
So retirement is all about the paychecks that we get. And the paychecks that we get dictate what tax bracket we fall in our retirement years. Just like while you're working, folks, the money you make puts you in a tax bracket. Right now, it's between 10 and 37%. So to prepare someone for taxation, especially when we start looking at our national debt, you can go to usdebtclock.org if you want to. You'll see it's over 30 trillion right now. And that's a pretty big deal because somebody's going to have to repay that. So either the government's going to eliminate every program that they have because they haven't been stewards with the money that we're forced to pay them, or they're going to increase taxes to pay for this solution. And that comes from the money that we have in our pre-tax retirement savings. So, Ben, what do you mean income? You know what? Your 401ks are designed to allow you to defer paying taxes. I get to save taxes now. I get to pay taxes later. When do you have to do that? It's called a required minimum distribution a distribution that gets added to your income, an income that gets added to your Social Security or pensions or any other sources of income that you might have that also impacts things like your Medicare, the extra tax that comes from IRMA, and all of these extra little things that are impacted by the paycheck, all right? And then if you need it, right, the additional RMD. So you may not want this money. You may not need it. You may have the three-legged stool, right? You may have had, the old way of doing things with the certainty. If you have a guaranteed pension, right, that gives you your paycheck, and you have Social Security that now is your paycheck, that's the extra cash flow that you have. Now you're already retiring your way, and the money that you haven't really thought about it. How is this impacting someone in the future? Folks, 90-year tax lows. Do you know the 90-year tax highs? Actually, it's pretty interesting. So Ronald Reagan only did 2 movies in the 40s. You know why? Because if he did 3, he got pushed into the top tax bracket. Can you guess what the top tax bracket was in the 40s? 94%. Well, that's pretty crazy. Yeah, think about that. I got $1 million IRA. If I need it, guess what I get to do? I get to keep 60,000 of it. Well, that doesn't leave votes of confidence for anybody. And so this is why people are, there's more fear today because that leg is broken and we're trying to save it on our own and we don't have the guarantees that we used to. Folks, you can have the guarantees of the retirement of the past. Taxes are a big portion of it. It's going to impact you and it is coming. Do you have a tax bomb? Are you ready for it?
Well, that's why I do want to ask you about this, because I had mentioned before the Roth conversion. Say that required minimum distribution. So on our retirement accounts or 401ks or 403bs, we now get to the age of 72. We're required to take out a certain amount. It's taxed. Right now, we're in the lowest tax brackets, likely, of our lifetime, right?
Yeah.
We all believe they're probably going to be going up. The Roth conversion, though, allows you not to have to take RMDs, but you have to do what first?
Well, you have to convert it into something that is no longer going to be taxed. And so there's certain tax codes that we can do this in. Number 1 would be the Roth tax code. We have Roth 401ks now, and we also have Roth IRAs. And then there's another, tax code called a 7702 tax code that is strictly held with an insurance custodian that gives us the opportunity to have tax-free as well. So there's different solutions for different needs. If we're trying to grow our money, well, maybe we're going to use the market and we do conversions. If we need income, maybe we look at an annuity that gives you a 20 or 35% bonus today, offset the taxes that you're going to pay. That's a potential thing. Or maybe we look at a 7702 where we're funding this thing. This is stuff like the Trump family and the Chase family have used for generations to pass tax-free wealth on to their legacy.
Okay, so Roth conversion means we take our retirement account, 401k, let's say, and let's say we've got $500,000 in there.
Yeah.
Want to convert it. Now, we've said this before, you don't necessarily need to do it all at once. We might do 100,000 this year and next year and do it in portions. But what you have to do is you have to pay the tax on what you convert into that Roth.
You do. So it's not a matter, again, we're not looking at tax evasion here, right? That's how people go to jail. So what we want to do is look at tax mitigation. So when you look at the 3 layers of taxation, right? On an IRA, we got RMDs, we got to pay ordinary income tax as income, okay? Then we reinvest the funds. Depending on where you put it, you're going to pay capital gains on the growth. And then when we pass away, the money that's left is fully taxable to our families. So we can run the retirement tax map for you. And what that does is it allows us to look at the impact of those 3 layers of taxation to your money versus converting something into something that's tax-free once. So now you're only impacting yourself one time versus 3 layers. So here's an example. I had $315,000 left over after an income plan and a risk plan was taken care of. $315,000 was going to create like $100 and something thousand of tax liability for a customer if taxes stay in the lowest tax bracket. Okay. But what if they increase like they have in the past, right?
Right.
The highest was 23 to 94. That's 2 times our current tax bracket to 3 times as a high. Folks, we know taxes are going to be going up. It's just a relative matter of when and how much. Well, we know when. right? We have until 2026 to plan for these things. And so we have to look at that. Yes, there are strategies around it. Does it make more sense to do it once or over time? I'll give you an example. The more money you have, sometimes it's better to rip the Band-Aid off quicker. I had a gentleman come in, $10 million in after-tax funds, $10 million in pre-tax funds, 71 years old, about to turn 72. He's now going to be pushing in the top tax bracket for the rest of his life. So, IRMA goes up, all of these other tax things go up, you're going to have the top tax brackets impacting the rest of your life. So what do? We took a look at that money, converting it. Yeah, you still got to pay $370,000 in tax at a 90-year low, but that's way better than paying tens of,
just paying more and more, double on that. And if you don't mind, with just a couple of minutes, let's define what is a 7702. We keep saying the number. Can you, for somebody like myself, tell me exactly what it is?
Well, a 7702 is a specifically structured tax code around specifically structured life insurance policies. Some of you go, I don't need life insurance. Maybe you don't. It's not about that. What it's about
But you might have life insurance that you've paid into for years, and you're saying this is something we can move around with.
This is something that is a very, very specific tax code, and who knows, they may take it away, right? Everything is not guaranteed to stay when it comes to taxes because our legislation, our political risk, the things that we have, they can change it at any given time. So you can take advantage of it, you get grandfathered in. And so we look at the solutions that are necessary today to mitigate your taxes over time versus having you pay more taxes over a long period. And so it's really just relative to what solution is the best for the individual. We don't leave an asset class off the table, Spike.
Right. And as the founder of Thrive, it seems like you do spend a lot of time talking about taxes. Now, taxes are not part of exactly what you don't do necessarily tax preparation, but you do tax planning, meaning tax planning for the future with your clients.
Yeah.
Do you then help them implement that? Do you work with a CPA or their outside firm, or you factor in talks with bringing in anybody inside the firm?
Absolutely. So we have, and so we'll use the shameless plug here. We're looking for a CPA partner right now inside of our firm at Thrive to help you with taxes your way, and that's going to be helping you with the tax preparation as part of your overall financial plan. And so we're looking for that. The tax planning portion is simplified. We can simplify it for you, let you know the impact today, the impact tomorrow. But when it comes down to it, to have somebody in-house with you as well to help you with the preparation as part of your plan is key. So if you know someone, let us know. We'd love to do that. But at the same time, folks, if you're looking to mitigate tax over your world and your current firms are not helping you do this, this is one way that we can help you. Again, it's all about income, right? It's about do we want tax-free income in the future? There's ways to do it. So again, to retire your way, it's your lifestyle goals and dreams plus your fixed expenses. Folks, don't just survive, thrive in retirement.
As you like to say, I want to continue to talk about tax solutions, how we can get most tax sheltered as we possibly can going into retirement without going to jail. That's always a good way to go.
Exactly.
So we'll continue to talk about tax solutions in retirement when we get back. Call right now, though, for your own complimentary retirement readiness review and tax map. We want to make sure that your mapped out strategies for what you will pay in taxes in the future are as low as they possibly can be. Should you possibly pay more in taxes right now, do that Roth conversion? Maybe. It depends on your situation. Call right now to work with a professional to find out. 855-855-7655. More Retire Your Way tax solutions that'll keep you out of jail when we get back right after this.
Call 855-855-7655 to receive your complimentary tax map with your retirement readiness review. Learn multiple strategies that can protect you from higher taxes now and in the future. Taxes are a threat to your financial stability in retirement. Protect yourself from the potential threat of rising taxes. As a retirement planning financial advisory firm, Ben and his team will help you navigate the financial waters to pursue your retirement goals. Call 855-855-7655. Ben and his team provide inclusive retirement services such as investment directives for your portfolio, income-producing strategies, and wealth preservation plans for your family and legacy. Call Ben and his team now at 855-855-7655 for your complimentary tax map with your retirement readiness review. Discover tax strategies to keep more of what you have saved in retirement, or use the QR code below to schedule today.
Welcome back with Ben Heizer of Retire Your Way, powered by Thrive. I'm your host, Spike Spangle. Today, we're talking about tax solutions in retirement. It continues to get tricky. In fact, just some numbers I pulled for you. The tax code itself, over 2,652 pages, at 450 words a page. It's about 1 million words. It's larger than the King James Bible. It's larger than all of the Harry Potter series put together. How is any regular person supposed to figure out the tax code on their own? What other kind of solutions are there out there? How do we stay tax protected in retirement?
Well, as we know, if you're married to a tax professional, right, how do you deal with insomnia? You ask them about their job. That's what Spike's talking about right now, right? The 7 million pages of tax code, right? It's overwhelming. And so, yes, what we want to do is we want to look at the impacts to your retirement so that you sleep well at night either way. But here's the thing. Taxes are interesting. You know what? Let's talk about something positive for a second, right?
Yeah.
So taxes, I mean, we can get this to drag down. It's a hazard to our income. But right now, interest rates have been going up. And so some of you might be just looking for a place to get a little bit better rate of return. And so we're going to pull up a slide here that has to do with something called a multi-year guaranteed annuity. And this is like a CD with an insurance custodian. So look at this stuff today, man. Interest rates have gone up. This might be able to help us with some of our lazy money sitting out there. Just get a little bit better rate of return, because there's certain asset classes that actually do better in this time versus worse. So look, a 2-year at 4.05 to a 7-year at 5.15%, folks. Wow. That's
and you're
pretty impressive.
saying that these function a lot like CDs. And what I also want to let the public know out there, these are the numbers as of right now of these broadcasts. Probably by the time that this goes to air, these numbers might have increased. So I would say call the phone number so you can get the updated rates. But multi-year guaranteed annuity doesn't come off the tongue as easy as CD, right? But you're saying it works similarly. We can't say the phrase exactly the same, but they're quite simple. We put our money in, we say we're gonna do it for 2 years or 3 years or 5 years, and we get that percentage, and then we get our money back. It's that simple,
It is. So the concept here, folks, is we all know CD, but a CD is a certificate of deposit at where? The bank, right? So the concept in an insurance custodian, they also play in the risk world and in the safe world. They have accounts that mirror CDs. They're called fixed annuities, MYGAs, right? I don't know where they come up with these names, Spike. This is crazy to me. But they try to make it complicated on purpose. I'm just teasing. So it's actually really simple. Guaranteed rate of return for a specific trading of time, right? So there is liquidity risk to these, but you get a guaranteed rate of return. At the end, it's fully liquid. You put it wherever you want. Now, one main difference between a MYGA from a tax perspective and a CD is the MYGAs grow tax deferred, and just like you can in real estate, or like you can do a 1031 and kind of push that tax over time, you can do the same thing with MYGAs. And so we got clients that take and put millions of dollars in MYGAs, kind of ladder them like CDs sometimes, because they want to get that fixed interest rate and can continue to kick that tax can down the road.
So Randy, if we could bring that slide back up once again, if we could take a look at that MYGA slide. So one of the things you're saying is that we could almost do this, because I remember my grandparents, we've talked about this before, used to ladder CDs. And if they want to splash into this pool, they could ladder MYGAs if they want. They could start with a 2 or a 3 year. Because what you're saying is interest rates are continuing to go up right now. So if you started with something at, let's say, a 4% and did a 2-year right now, we could see where interest rates go maybe another year from now. Maybe that goes up to 5%. We get another one. So we could do a little bit at a time with a portion. And this is one of the ways that we start creating consistent income throughout retirement.
You know, again, the market's been very volatile. So if you're looking for safe places, or you just got a bunch of extra money sitting in your bank account doing nothing for you, this is a great way to get a reasonable interest rate today. And this is the highest we've seen interest rates in a very, very long time. So you can do that. This also helps us impact when we look at from a tax perspective, where are things at today? Well, you can use fixed asset classes like even like a fixed indexed annuity. If we're going to talk about insurance companies are thriving right now. Interest rates go up, it only benefits you on those fixed asset classes. So what if you wanted to convert an account today that you don't need from an IRA to a Roth IRA? Well, you know what? One of the highest bonuses in history right now is right today. Again, this may not be there 6 months from now or a month from now or a week from now. We don't know. But right now it's 35%. Can you imagine? I got to pay 37% in tax one time. No more paying taxes ever again. But I get a 35% bonus to help me offset that. And then that money continues to grow in a safe place.
Would you mind for me, though, for those who aren't as familiar with the insurance field, what exactly do you mean by bonus? I mean, it sounds like, so I bring you 200, or let's keep the math simple. I bring you $100,000.
$35,000 up front.
Up front goes into the annuity total.
Yep.
And so then if I annuitize that, that's like money in my own pocket.
Well,
it's literally paid for the taxes that I just paid to do the Roth conversion.
So it can be used for a retirement income account. It can be used for a legacy or death benefit to your family. And oftentimes some of these accounts today, they have hybrid benefits for long-term care. And so again, for the right type of planning solution, if we need income or we're looking at a Roth conversion to leave legacy, these can be ways that we don't need to be medically underwritten, like a 7702 plan. We got get approved for it. It's a great vehicle. Like I said, you know, your wealthy families like the Trump family and the Chase family have been using this for a long time to pass generational wealth in a tax-free manner, because taxes can have the largest impact to your world. So how do we get rid of taxation? We take advantage of the low tax rates today so that you don't have to be subjugated to the game changing on you in a few years and having, you know, the dream of like, hey, I got all this money. I got $10 million in my account. Well, if it goes up to, you know, tax rates like we had in the 40s or the 70s, a majority of those retirement accounts are going to be worth almost nothing.
Right, and even 5 or 10 percentage points of increase in taxes will make a difference to folks right now. So, Ben, thank you so much for subjugating me to all of these solutions. Wonderful to use. No, but you talked about Roth conversion, the 7702, talking about use of things like MYGAs and so forth. This isn't just talking about the events that are going out there. You've provided wonderful solutions today, and I know you will continue, Will. We've got to wrap up today's program. Maybe you could take us home with the Retirement Readiness Review and Tax Map. What exactly is that for folks?
The Retirement Readiness Review is to look at things like your income needs and your taxes and your risk and your fees and the legacy that you want to leave to others. Outside of that, we got healthcare needs as well. So as we dig into all of these areas, using the team and the technology necessary to help you be successful, folks, I'm going to ask you, don't just survive. Thrive in retirement. Give us a call today. Click that QR code to set your own appointment.
Thank you so much, Ben. Make sure that you come back next week. Call the phone number right there for your own Retirement Readiness Review and Tax Map.